Good morning, my dear future chartered accountants. I hope everybody is doing great. We are going to do the new chapter which has been introduced in FR new syllabus by your great ICAI, which are chapter 16 and then chapter 17. Chapter 16, Professional and Ethical Duty of a Chartered Accountant. Typically, you know that these professional ethics were part of your auditing syllabus, which even now it is. Definitely, even now it is part of your auditing syllabus. That is where you read, learn the ethics by clause, line by line. I hope you are. But Institute thought that we have to introduce this at all other subjects also to make aware of or to make aware of the seriousness of this topic for the upcoming chartered accountants like you. So what the Institute has done, they have introduced this in all the subjects at different levels. So in FR also, we are going to learn professional ethics considering the examples relevant for our reporting subject. In fact, even after passing CA exams, chartered accountants have to complete CPE requirements. Certain number of hours are there. I'm sure you must be aware of it, where now they have made mandatory 2 hours or 4 hours, I don't remember exactly, for I think 2 hours for ethical CPE hours you have to attend and 2 hours of auditing standards you have to attend, if I'm not wrong. For various reasons, Institute has come up with this. Even recently, NFRA has put some penalty on a chartered accountants on 80 JJA wrong deduction for a company. So, a lot of content is available, you can go through that. So, ICI is under the pressure, chartered accountants are under the pressure by different angles and means. So, as a response, you are learning more. But anyway, it is not going to be a very difficult topic. It's going to be a very smooth one. It's more of a ethical one, like what is integrity, what is objectivity. If somebody tells you that you please show more profits, you will pay more fees, obviously you should not accept. So few obvious means, but sometimes few obvious means also need to be repeatedly told. For example, in cinema, people always say smoking injurious to health, alcohol injurious to health. At the beginning of every movie they tell. We know, but still they show because certain things requires repetition. Even if you open Zerodha account, when you log in for the first time, in every day they'll tell you that entering into derivative market is riskier. Only like 5% of the people make some money. Even you don't do derivative, just do login in Zerodha account, this message pops up because certain times repetitions are required. The same logic has been applied for this chapter as well. Okay, now coming to the modus operandi, how we are going to cover this. I will be using the study material as the base for discussion. But in a concise manner, in my material, if you have got my material, if you have purchased my classes, then you get in a summarized manner like the entire chapter rather than in a detailed manner like Institute, and I would have bifurcated into theory in one place and problems in another place, same problems. I have not added any new questions as such, but I have just bifurcated so that in a concise manner theory can be read, then problems you can do it independently. That's how my material is structured, and also I'll be using the charts for discussion purpose, which is very much useful for your revision purpose and also for a day before examination. I'll be using that also as the basis. So I'll be using institute material to highlight the important points and a chart for our overall discussion overview purpose. Of course, I'll be doing problem from study material, so that will be your base. If you cover this much, I'm pretty much sure you can face the examination comfortably. Okay, so let's move towards the topics one by one now. Okay, now what is the meaning of ethics? Again, I'm not going in too much into the definition as such. Again, because it's part of your auditing subject where you're going to read few things in detail, what and each every element means, definition of it as per clause by clause. You're going to read it. I'm not going to interfere in that element. Overall, what is an ethic? Ethical person means following rules. Of course, you have to follow rules. But when the things are not clear, which stand you take? See, when there is a black and white, okay, you select very clearly. This is right, this is wrong. But most of the times, there will be always a gray area where the legal framework may not tell, but as ethical people, sometimes as a moral ethics, people do follow. Anyway, sometimes this moral policing and all in India goes to a different extent. But anyway, so as an accountant, what are the points to be kept in mind? So you are accountant of a company and there are some money laundering going on, or you feel that there is something wrong. The reporting is not happening properly. Is it the duty of an accountant to go and report? Because there will be a conflict, right? Because you are working under a company and you are obliged to protect, or you have certain obligation towards confidentiality. At the same time, you also have obligation of an accountant to uphold the principles and prestige of our institute and the profession. And also, you can say legally, as a citizen, you might have to report certain things. But when you're not clear, what do? See, if you know, yes, this is wrong, there is a mistake going on, company is involving in certain illegal matters, you can, yes, definitely say you have an obligation. But if you're not sure, you're not in that position, you are a middle level management. In those situations, how do you face it? That's where this discussion comes in support of the professionals. Okay, let's go further. Let's take it one by one. What does institute talks about? Initially, okay, what are ethics? Ethics to be sort of moral principles beyond a legal framework. Morally, are you going to do or not? In fact, I'm always on the receiving side from my friend angle and certain people that I am too moralistic. Anyway, idealistic, you can say. That, even Narayan Murthy recently in an interview said, in a corporate governance manner, that he did not let his wife Sudhamurthy join Infosys in spite of her qualifications. That is right or wrong is secondary, but he took that decision morally because he felt a company should be run independently by professionals, not by family members. These days there's a lot of things going on about nepotism and all. Anyway, I will not go behind those elements. Anyway, so moral principles means that what you said to yourself, what is right, what is wrong, and not by just a legal framework. Even if you saw a movie, 12th Fail, there everybody cheats in examination except one person. And he says that the satisfaction of passing in a third level or a third lower marks is better than cheating and getting a higher marks. Yeah. So morally getting a lower salary, lower income is still more confident than, because it is the soul you're answerable to at the end of the day. Anyway, let's go further. So as far as the framework is concerned, International Federation of Accountant has developed the code, and using that also, using that only, Indian Accounting Ethical Standards Board, Indian Standards Board, we also have used the same thing, taken as inspiration as the basis, and these codes have been developed. So that is the things, more for case of audits, reviews, NFRA, the case happened, you can go through that. More than that, we don't have to focus on that paragraph. Chart accountant, who is a chart accountant? Who is suffering forever is called as chart accountant. We say that heated ornament becomes, heated gold becomes ornament, tortured student becomes chartered accountant. So a person qualifying as a chartered accountant becomes a member on the registration with the Institute of Chartered Accountants of India. Every member has to carry on the professional and other conduct as per Chartered Accountants Act 1949. So what are professional or misconduct? Professional or misconduct has been defined in the part 1, part 2, schedule, first schedule and second schedule talks about professional misconduct, and other misconduct is defined in part 4 of first schedule and part 3 of second schedule. Institute has given this like first schedule, second schedule, and number of clauses. That's all they have given. They have not given in detail each of them elements, because they said the clauses covered in part 1, 2, 3 have been flowchart below. However, for detailed explanation, you must refer chapter in auditing. So I don't want to tell that. At the same time, I don't want to go too much in depth into it, but I want to get a jhalak of it. I want you to get a glimpse of those list of clauses. So I will not refer institute material. I will refer my summary chart book. So whatever we have just discussed now, I have covered here in this table. What is the meaning of ethics and the framework given by the International Code of Ethics, and then what is ethics as per ICAI Act. Those 3 points have been covered in this chart. So this will help you revise quickly, especially during your day before examination. Okay, so this okay, so you see, ICAI Act broadly talks about 2 schedules regarding professional misconduct and ethics. This is the overview of it. If you feel this, the font is very small, you can please download this chart book and use the chart book, and then you can read from that, right? Anyway, this is what it must be part of your auditing material also. So if you have a auditing on this standard in this chapter, you can open that, you will find it there also. Anyway, I am not auditing faculty, but this chart is available in my chart book. Okay, let's read part 1 to CAs in practice. Part 2, members of the institute in service. So basically part 1 is for practice, part 2 is for employment, and part 3 is member of the institute generally, that is for both people who are in practice as well as who are in employment. And second part talks about other misconduct. Schedule 2 is CAs in practice part 1, members in general part 2, which means that employment part is not there in schedule 2, and then part 3, other misconduct. Okay, let's take a look at quickly one by one. I will not go through too much in depth, but you should know quickly the glance of all the professional misconduct ethics list. Let us quickly go through it. First clause is talking about allow others to practice in the name of yours. You say, you please go and practice, means you go and sign on behalf of me, who is not a chartered accountant, who is not a partner. Then that is clause 1. Who share fees, who is not chartered accountant, not a partner. For getting a business, you pay fees, you pay referral commission. Not allowed. Accept the share of profit, reverse. By giving a referral, you accept a share of profit, that is also not accepted. Partnership with a non-CA, you can only have partnership with CAs. Non-CAs, yes, there are some multidisciplinary partnership firms, like you can have a partnership firm with company secretary, lawyers, with other profession, that you keep it aside. Otherwise, you cannot have a partnership with who is not a chartered accountant. So if your wife is not a CA, but you cannot form, you cannot form a partnership containing with him or her, as the case may be. So try to explain that person with this logic. Anyway, secure work through others, that is basically like a referral commission advertisement, or you put yourself name in some common platform. You have an appointment, you have an agent who can say, I will get the business for you. No, secure work through others is not possible. Solicit through advertisement, you cannot say we are A, B, C and co with the in the industry for last 50 years, please come and file income tax returns, like they say, no, all the Pepsi advertisements will come, all these Jarda tobacco advertisements will come, like that. You imagine if CAs also comes and Shah Rukh Khan comes and say that please file income tax return through with this person. But the problem is, what is happening? We CAs cannot advertise ourselves like filing tax returns, and we will be doing the audits. We are governed by these professional ethics. But what about these lot of other platforms are running, right? I don't want to name, like there are few. You go and do a Google search, online filing, so many will come up. They keep doing advertising and we have to compete with them in terms of the awareness like this, marketing things like this, and also in terms of fees. We have another restriction telling minimum fees you have to charge so much. Anyway, that's required. We cannot undercut our fees and then take a job. That is not recommended, and that is not the prestige of our profession also. But anyway, that is where we are finding it hard, especially many upcoming people in practice finding it hard to get jobs because of these restrictions. We cannot advertise ourselves, we cannot market ourselves, but we have to compete with the people who do it. Yes, that's a challenge. Anyway, so you cannot solicit through advertisement. You're not using CA logo or CA name in signing certifications and documents. Communicating with the previous auditor, you know there are certain procedures when you are appointed as an auditor of a company. You know, only a CA can become an auditor of a company. You have the obligation to communicate with the previous auditor, telling that you have been appointed. Is there anything that you must be aware of? Or whether his fees have been paid or not, right? You have an obligation to follow certain procedures. That's what you should do. First, you have to communicate, and second, you have to follow the process when you are appointed as a auditor of a company, you have to intimate the previous auditor, get the details from him, whether there is any issue that you should be aware of, and also whether there is a situation of fees being unpaid. Then you cannot take a percentage of contingent profits, uncertain profits. You cannot take a share of it. In the sense, your fees cannot be auditing fees, 2% of your company's sales. See, you have to charge the fees considering the effort involved and considering the volume of transactions, which may say company's turnover is so much, so I am going to charge the fees. That is fine. That is the basis for forming the fees, but fees cannot be a percentage of sales. Fees cannot be a percentage of profits. Contingent in nature, uncertain nature. That means you become obligatory, right? You understand the logical reason behind it? Indirectly, you are telling, if the company makes profit, I make more fees of it. That should not be the way of it, right? Anyway, great. So you cannot have a fees as percentage of contingent profits or contingent activities like sales, revenue, future revenue, like that. You cannot engage in other business. If you are in practice, you cannot run a hotel. If you are in practice, you cannot start your own company. That is why many CA firms I have seen who provide accounting services make their wives as partner and they provide the accounting services. And of course, you have a separate staff for that entity, because CAs cannot run other business apart from the practice what you're doing. If yes, take a permission or surrender COP and then you can do business. A lot of people are there in our people who do other business, who's especially in my experience of I was part of a wealth management firm earlier, where I spoke to so many people of our clients who are not CAs but who are into so many business. You don't believe. I was pleasantly surprised to see CAs succeeding in so many other business, right? Anyway, even Shark Tank, if you see that reality show, couple of them judges are also CAs. So obviously they are not in practice. They would have quit and started their own company and running a business. And if you allow others to sign on behalf of you, that is also professional misconduct. Okay, that is on clause to 12 clauses on part 1 applicable for in practice. Then what about applicable for people in employment? And for that, this is sharing emoluments. Again, that is like a sharing. What happens? Okay, sharing emoluments means sharing fees. You are in a employment of a company and you agree to share a percentage of profits, that I will get the business, and if I get the business, I'll share a certain amount with you. That is not possible, like giving gifts, inducing him to give you business. I have seen certain businesses have doing that. Like if you want to get through Pune also, you pay some amount and say that get some information. In government departments, and no comments. That is like a fees you pay, like an entry fees when you want to go to government departments. Even in corporates, if you want to get some information or if you want to get some business, right? So what do you tell? You go to the managing director and say, I'll pay you something. You please make sure the contract is allotted to my company only. Let's say you are doing a catering business, food business. That company is providing lunch to its employees and you want to provide that. Of course, that's a business for you. So you go to the appropriate authority, like let's say a finance manager or even HR in certain departments, in some companies who make those decisions. You go and tell them, please make sure the contract you give it to me and I'll pay you 10% kickback. emoluments, gifts, inducements, not allowed, or accepting it, reverse also is not there. So sharing emoluments is giving and accepting commission is receiving. And I always say this, I'm mostly into training either the students or even the corporates, and also work as a consultant like a freelancer. And I do trading for myself. I don't do consultancy on trading. Personally, I just do trading on myself. So what I typically do is I say I do trading and training. So some people do ask me this, you have a good academic qualification and a corporate experience, why you have taken teaching field? Because I would say, what is being in employment or being in practice? Being in employment means it's a process of getting paid for scolding from your boss or manager. You get more scoldings, you get paid more, and that is employment. What is practice? It's also a process of getting paid for scolding from two sets of people. One, the business people who don't understand how the department works, and from the department people who don't understand how the business works. In between, CA is a sandwich and you get paid for it. And is there a profession you can scold somebody else and still get paid? I would say teaching is the only profession which gives opportunity, so I am into that. Anyway, teaching is what I have selected because that's where I have the opportunity to learn continuously. The more I teach, the more I learn, so I'm part of it. Anyway, so for people like me, this is what is applicable. Members of the institute generally who are not in practice, not in employment, there will be people, species like me, and applicable to them also in general to all the members of the CA institutes. Who acts as FCA? No, to become a fellow chartered accountant, there are certain rules. A person in practice, a person in employment, if you are there for 5 years, by submitting appropriate documents, ACA can become FCA, both in employment also and from practice also. So, if you don't follow the process, you have not become FCA, but you project as if you are FCA, in those cases, you are, this is the first clause regarding, if you don't follow the procedure but acts as a FCA. Don't provide the data to authority, NFRA comes. As an auditor, you don't provide certain documents. Ethical review comes, now the peer review, you don't provide certain documents, any of those things where to the institute or statutorily when you're obliged to provide information and data, you don't provide. That's where this clause is covered. And provide false information knowingly to be a wrong thing, you provide false information, that's where you cover here. And part 4, other misconducts, imprisonment for less than 6 months. What about imprisonment more than 6 months? And that is covered here. In the right extreme, you may not be able to see. I think now you can see on the right side. Imprisonment more than 6 months. So less than 6 months is Schedule 1 Part 4 and more than 6 months is Schedule 2 and Part 3. We'll come to that little later. Okay, so and anything in the opinion of ICAI that brings disrepute to the profession, if you are involving anything in disrepute profession, converting black money to white money, giving ideas, being part of the process, and one CA, I saw in some news there, gave an idea like this. You know what? GST has come. If it is a B2B business, the receiver, the buyer will take the input credit. Correct. So if you think about a construction company, real estate development company, when you do a contract for a business, you construct a building for Infosys, you construct a building for Reliance. So you raise the GST bill, of course they pay, and they are a business, so they take the input credit while paying their GST payments. What if it is not a business, it is not Infosys, it is not Reliance, a construction company is giving the services, getting the building constructed for individual B2C. Can individual claim input credit? No. So what the CA told, and he has given a good advice. I don't know whether CA given or not. I was told like that. It's just a rumor, but that is not important. You should not give advice like this, is what I'm telling. Sometimes brains, intelligent brains, falling into wrong places. So he gave like this. You raise an invoice in the name of some fictitious business. Instead of giving the bill in the name of the individual, you raise the name of a fictitious business, which I will speak to them and I will ask them to take input credit and give some cash back to you. All the three people can share profits. If the invoice is given to the individuals, they cannot take input credit. So you raise the invoice in the name of a business, let them claim input credit, and in the form of some payments, let them make the payment as a cashback, kickback offer to the company. So all the parties are beneficial. And some people argued, no, let's do one thing, let's not charge GST. Individuals say, I don't want GST bill. Many customers do say that. Then also there is an issue. What? You think of a company, have purchased cement, have purchased material, I paid GST, have used that in construction of the house, and I'm not raising outward GST bill. Input is there, output is not there. Again, you are going to get caught. It's a simple tracking law, that is GST law. So don't try to give this extra out of the world ideas. Be ethical is what we are trying to emphasize. Follow the regular route as far as possible. You might say that then that case you don't get clients. Does it mean that you get clients only when you don't follow rules? That's not a correct statement. You have to you provide the good service to the clients. Following the law, following the rules may be painful at the beginning. In the long term, it's always beneficial. And if that comes at the cost of losing certain clients, be it so. Rather than suffering it later. Remember, I told you 12th fail movie. Getting a lower fees from a honest taxpayer gives you more peace than getting a fees from a taxpayer who is playing with authorities. Anyway, got it? So this is regarding the Schedule 1 of ICAI Act 1949. Now let's go to the Schedule 2. Let me just adjust this. Okay, Schedule 2 now. Yeah. Okay. Schedule 2 talks about three parts because it does not have a employment clause per se. We are having application related to CAs in practice, members of the institute generally, and other misconduct. CAs in practice disclose information without consent. You disclose, provide the data without taking the consent. So, for example, statutorily, there is a case going on against the company or your client. There's a case going on, money laundering case going on ED, Enforcement Director FEMA regulation case going on, and you are asked to provide certain data points, you have to disclose that I am providing this data point. Certifies without the base, certification of future financial statements. You cannot say valuation of a company is so much. You can express opinion, you cannot certify because you cannot know absolutely value is so much. Certifying the accuracy forecast is what I just mentioned. One certifying without the base and other is certifying about the future forecast. Both are not allowed. Express opinion if there is substantial interest. Your wife is a managing director of a company and you provide auditing opinion or any other opinion. You cannot become auditor when the relative is there, but any other things where you are having an investments or you are having substantial interest, you cannot express an opinion because you are conflict of interest, right? Not disclosing material fact, you know something but you're not disclosing. Not reporting material misstatement. No due diligence. It's the most important point, I would say. Due diligence. As an auditor, you have to express opinion by looking at or verifying the various elements of accounting reporting of an organization. Can you check each and every transactions and authenticate the accuracy of it? No, you have to follow audit sampling. How do you do audit sampling? There are analytical tools. You do percentage. I select randomly 10 transactions, any value above 1 crore. You follow certain criteria, due diligence. And auditing standards are there. Following those auditing standards, you have to conduct your business. You mean the auditing process. You don't follow and you cannot say that standard came newly, I don't know. Right? So that's what. No due diligence in performing your duties, not obtaining sufficient information while doing your business, report material departure from accounting standards or from any other compliances if the company is not followed, report it, and not keeping client money in a separate bank account. Client sometimes gives the money to you and say, you please make the payment of some MCA filing fees or TDS payments, right? He says, I have some issues or I want you to make the payment. If you receive the client money not as your fees for making some other payments like statutory payment, like some SEZ fees payments, MCA filing fees, in those cases you have to transfer the money to a separate bank account. Okay, then members of the institute generally contravenes any ICI regulations, disclose confidential information, submit false information to ICAI, embezzles money, take money and run away, in general applicable to employment as well as if you are in practice. And last one, the clause 1, that is part 3, other misconduct, imprisonment more than 6 months, then that is also a professional misconduct. Okay, so this is the overview of the ICA Act, Schedule 1, Schedule 2, which you learn in detail in your auditing professional ethics subject. Here, I just give an idea about it because when we are solving certain problems, we might have to quote certain relevant portion of this, right? So, let's go further. Okay, so now coming to so now coming to the FR, this particular chapter related ethical elements. So we have two parts. Part 1 called as just 1 second, just a small adjustment. So part 1 is complying with the code, fundamental principle and conceptual framework, and part 2 will come little later. So that's what institute issue is. It will not come in same place. Part 2 is for chartered accountant service. So for which I have given a simple chart which you will be able to summarize here, right? So part 1 is complying with the code, fundamental principles, conceptual framework. Part 2 is for chartered accountants in service, basically means who are in employment. Okay, let's talk about what is this part 1 applicable to mostly, applicable to CAs. Well, related to reporting part, complying with the code to meet the responsibility to act in public interest in case of conflict, other laws and regulation prevails. Let's go to that point and see if you are able to get something from what institute has given, and any question is there relevant to that also we can go through that. So complying with the code, a distinguished mark of accounting profession is acceptance responsibility to act in public interest, and accountant responsibility is not exclusively to satisfy the need of individual client or employing organization. So chartered accountant responsibility is not exclusively the need of an individual client or employing organization. See, you are employed by certain company, or you are being engaged by certain company, in the sense the company is your client. In that case, you are receiving the fees and you have an obligation to provide the services: auditing service, tax planning service, management consultancy, investment advice, merger advice, restructuring advice. Maybe you can sometimes support in loan processing also, right? At the same time, you are also having an obligation to the society at large. This is where things becomes not very clear, because if you follow rules or don't follow rules, yes, we understand, but certain times you cannot really differentiate. See, for example, you are providing a tax planning service by telling them don't take or let's say the company has the option to get merged. You can merge with company A or merge with company B. Where financially you see company A is more beneficial, you say yes, merge with company A. But had you merged with company B, maybe they are doing a better business of providing the jobs to the lower section of the people, right? I mean, financially, company A is more attractive, so you recommend that. But society at large, maybe company B was more specific. So I cannot really say which is the right one, wrong one. But what we can tell is when you provide service, as far as possible, try to keep the large society in mind while giving the advices and services, right? So when you are trying to design a business plan for a company for their expansion purpose, yes, they have to make profit. At the same time, you can also include things such as, oh, you start the company in these areas, that geographically people are backward, they get employment opportunities. Their objective is not that. It has to make financial viability, but on top of it, you can also include other considerations. And sometimes, of course, legally you are bound as well. For example, you know that the management is cooking up something, then you cannot say they are our clients, so I'm not going to disclose anything. You are under obligation to provide the information to the respective authorities. So because your obligation does not stop at the client or the employer organization, your obligation is towards the society as a whole, at a public at large. There might be circumstances where regulations preclude an accountant from complying with certain parts of the codes and circumstances. Those laws and regulations prevail, accountants will comply with other laws, parts of the code. So we have learned, right? So many codes are there. So in this process, if any other law prevails, any criminal law, CRPC, Prevention of Money Laundering Act, any of those laws, if those prevails, if those laws are there preventing you from complying with the code, those laws shall prevail. Okay, so that's the heading, complying with the code. Let's see what I've given: material to meet, that's the summary point, to meet the responsibility of the public interest, and in case of conflict of the code, means code of ethics, with other laws will prevail. Okay, then we have certain fundamental principles to follow. The fundamental principles are integrity, objectivity, professional competence and due care, confidentiality, professional behavior. Let's see what are those individual means. Integrity means to be straightforward and be honest. If you feel that something is going wrong, you're not comfortable, or the interpretation of certain sections, GST rates applicable, you say, I'm not in favor, be open about it, be straightforward. It's always better to take the brunt now rather than later point in time. So be straightforward, be honest, shall not associate with material false or misleading statement providing negligibly. Again, these are obvious points, right? Shall not be associated with material false statements. Satyam case. Company wants to show more sales. You know it. Don't certify it. Don't associate with materially false. Few small things which you are not aware of, it's fine. You are not certifying a balance sheet. You are expressing an opinion on a balance sheet, right? So, few basic elements here and there, it's fine, but material misstatements, not accepted. Misleading statement or providing it negligibly without making enough auditing, without making enough sampling, you express your opinion simply because I've seen some people, they just sign the balance sheet. Somebody else who is CA not qualified or tax practitioner, somehow they call themselves, they have clients, they call themselves auditor also sometimes, they prepare financial statements, they help the client with monthly filings and compliances, they prepare financial statements, they prepare audit report also, and you just have to sign it and you get paid for it. So without performing enough process, if you indulge, that's where integrity is going for a toss. So basically, what is integrity? When nobody sees what you do, that is integral. Somebody sees, oh, traffic police is there, I'll stop. If traffic police is not there, then I'll simply move. That is not integral. If somebody comes and checks, then only I'll do it. If somebody verifies, then only I'll do it. Examination, cheating, 12th fail example again. Whether somebody checks or not, people around me are doing it or not, I will not cheat. That's the integral part you have to adopt. Let me tell you, my dear friends, companies you can buy, shares you can buy, integrity you cannot buy. So, if you are a person with strong integrity and moral values, I'll tell you, whether you are rich or not, having good car or not, does not matter. Whether you have good friends or not, you travel or not, the confidence, the soul satisfaction, I have done nothing wrong knowingly, that gives a different level of satisfaction in life. You try to do it. For example, at 11:30 in the night, if there is a red signal, you stop. Not for others, you just feel good. You feel more confident, right? See, at the end of the day, universe has to get connected. Subconsciously, if you want to be more accurate, if subconsciously you have to be more stronger, you have to do conscious activities properly. If you do conscious activities properly, subconscious, unconscious things will follow. But anyway, let's not go for too much of GAN session at this point in time. Okay, so that's what is regarding integrity. Let's see if Institute has told anything. To be straightforward, to be honest, yeah, shall comply the principle of integrity, shall not knowingly associate with reports, must statements, information provided negligently. Yeah, that's what it said. Objectivity, no bias or conflict of interest or undue influence to others. No conflict of interest. Don't give a favorable opinion to a company because you are planning to quit your practice and planning to join that company's employee, where they said, you please give a free opinion now, a clean opinion now, and we'll give you 10% extra bonus when you join our company, or we'll give the salary for a job for your son or something. Doing a favor. Conflict of interest, don't express opinion, or don't have any bias. Don't tell, oh, this company promoter I like, I know he's struggling, let me give a clean. I know he's trying to do something with the financial statements, he's siphoning off money, he's taking the money, but I know it is for a good purpose. Sometimes in movies and all you see, right? You take the money from rich and give it to poor. See, it's not just the end, means also matters. Some people think like this. I'm slightly going out of the context, but I feel it's my responsibility, my ethical responsibility to share my thoughts at least. You can decide what path you have to follow. Some people have this opinion, especially by watching movies, influenced by movies. I will steal money from the rich and give it to poor because they deserve it. And sometimes these caste things are also followed, telling that caste A is always right, caste B is always wrong, religion A is always right, religion B is always wrong. Anyway, that is even separate point. Even if you assume rich has followed unethical means of earning money, we cannot follow unethical means of taking money from them, because if you do, what standard you are setting in a larger process, next day those unethical people who earned money, right, they can follow this unethical means to take money back. You are getting my point? It may seem filmy, heroic, take money from the rich who have exploited the poor, take money from them, give it back. It goods on film screen, just enjoy. Please don't try to expect in real life. It should not, because if you do, if you make illegal a normal thing, how do you distinguish if somebody is doing it genuinely or not? Right? So when you talk about things at large scale, when you talk about things in where the precedents will follow, where everybody has to follow, a standard has to be set, it's not just the end, it's also the means. You can say, and I want to pass the exams, so I will do cheating in exams. Cricket, have you seen the Steve Smith Warner controversy? They want to win the game at any cost. That's not wrong. But they are doing in unethical manner. That is wrong. It's not just about the end, it's also about the route you take. I have seen many people unfortunately compromising on this. At least I am not in favor of that. You want to build the practice. I have, maybe I can take his name. His name is Madhukar Hiregange, who is a stalwart, well known in GST. When I was interacting with him, he told me this. When he wanted to start a practice in GST, at that time it was indirect tax laws, customs, where usually they were always finding it difficult not to get the things done in the government department so easily without bribe. So he asked his mentor, Madhukar Hiregange sir asked his mentor, can I practice in indirect tax without bribe? His mentor told, by all means. So he took that inspiration and he built, not only in one place, in multiple places. If you have to follow his journey, in my opinion, please do a Google search. You will read a lot about him. He says, he spoke to me, he says, I have zero bribe policy in our organization. I'm just trying to tell you it's possible. It's difficult, of course it's difficult, but it is possible. Please, it's tempting. Pay something, get the things done. It is tempting. And I can also have seen in a lot of places in traffic also. People violate the rules, come in one ways, they don't follow lane principle, and if you ask them, they tell, who will follow the rules? Right? That's a constant answer you'll always get. But, and they'll also tell one more beautiful argument. They'll tell you this. See, we have done small mistake. Look at Vijay Mallya. Look at those politicians. They siphon off crores of public money. Nothing happens to them. So why should somebody bothers me? What foolish logic is that? Because they get away with big crime, does it mean small crime should not be punished and we have to let you becoming big criminal? Or other way of thinking is, let me also tell you, every time you violate something, you are not competing with other criminal. You are violating the rights of other person following the law. So in a traffic signal, when everybody is standing, if you go suddenly on the opposite side, you are not competing with a bigger politician, bigger criminal. You are violating the rights of the people who are following the law and standing there. They are, why they should be honest? You are taking away their rights, right? So you also try to have those principles. You also say that no bribe, if you have to lose the client, let it be. You will get a client. You keep searching for it, matching your principles, you'll get it. And some people put one more argument. If not me, somebody else will do it for them. So why do you do it? Let them do it. Anyway, let's come back to this. We have to finish a lot more here now. No bias, conflict of interest, or undue influence of others. Yes, that's what is objectivity. Questions will come to it little later. Let me quickly go through the other elements also. Professional competence and due care. Comply with relevant regulations. Consider consulting other firms, institute, or legal counsel. You are giving tax planning. You are giving a suggestion that you can take a weighted deduction for scientific research equipment, section 35 something. Now the new law has come, for example, weighted deduction not available. Right? Be careful while giving the advice. If you don't know, take others' help. You cannot be an expert in all the subjects. One person cannot be an expert in all the subjects. Take others' help, other professionals, take their opinion in writing. Or sometimes, if you're not very clear, go to the institute and ask for clarification. Like nowadays, a lot of these, what do you call, digital asset tests coming in, cryptocurrency, Bitcoin. If somebody is purchasing, how do you account? How do you report? How do you offer for taxation? If you are not clear, take the expert's help. If they don't provide, go to the institute. If institute is not giving you yet, go to other legal counsel, approach income tax department only. Yeah, that is professional competence and due care. Let's see, institute also, yeah, says the same thing. Nothing much there. Okay, coming to confidentiality, yes, that is one of the most important things which is, I would say, not taken care. And as of now, especially digital privacy law being enacted, it's hell of a different things going forward. Again, just to share my experience quickly, one of my friend who is into practice, he was getting certain jobs done from US, Europe and all. And I saw him having two laptops. I asked, what are you doing? Why you have two laptops? He says, one for India, one for Europe. I said, why? Because if you want any work to be done from Europe, you have to follow strict confidential process. For example, for that laptop, pen drive cannot be inserted. I mean, you can insert, but you cannot copy any data. Protected. Digital privacy. So when you are in CA practice or in employment, you will be in possession of so much of data and confidential data, financial data and other transaction data in your hands. As simple, if you are filing a tax return for an individual, you will have his Aadhaar, you will have his PAN number, address, mobile number, email ID and what not. And sometimes you may have to take his login password and file it. Sometimes. I would not recommend all the times. So you will be in possession of confidential information. You will be auditing a bigger corporate. So you know how they tender, when they allot a contract, the what process they follow, the internal, the technology infrastructure you might be having exposed. Confidentiality, don't give those information to somebody else and don't let them make use of it. Yeah, confidential information. Let's quickly go through my points. Be alert to the possibility of inadvertent disclosure. Oh, sometimes inadvertently disclose it, without knowing you disclose it. Like now I am giving examples very consciously. I am not just thinking in the air, right? When I'm thinking about good things, I'm taking the names. Otherwise, I'm not taking the names. I'm just telling my friend, right? Sometimes inadvertently we disclose something. Whichever I disclose about, like Madhukar Hiragange sir, which is his inspirational. So everybody should know. But I'm not talking about anything specific. There are a lot of issues also happening in so many other places. Anyway, so sometimes when you go for a lunch with the client or you meet in CA get together, you talk about my client is so much, my client is having net worth of 100 crores. Sometimes to show off, sometimes in the process of normal discussion, you might get to know the names. Please don't disclose the client names, their confidential information. Without knowingly, sometimes some things can come up. Don't do it. When I was part of the wealth management firm earlier, that was the issue I found. One of the salesperson, because he want to sell his business to other people, he say, see, he is my client, that cricketer is my client, which might be true, but you cannot disclose it. Then we did one more, without his permission, we cannot disclose. If he agrees, is fine. One time one happened as part of wealth management firm, not a CA firm, but same thing happened. Mr. A was our client, and Mr. B was also going to be a prospective client. He is signing the papers and all. So we are trying to meet B, right, who is our prospective client, who is a brother of A. Okay, what's wrong with it? A and B both can be brothers, can be your client. Yes. So you are going into his house. A call comes from A, and we told him we are going to your brother house to meet him. We got a backslash like anything. How can we disclose such confidential information? And our wealth management firm, it's about investments. Maybe brothers. Still, you should not disclose. They are independent clients. Are you understanding the seriousness of it? It's applicable everywhere. So you don't tell my client is a cricketer like this, my client is film star like this. You don't have any business to disclose any information. Be aware of inadvertent means not knowingly you disclose certain information like this. Okay, then maintain confidentiality information within the firm also, not only with outsider, within the firm also. Maintain the confidentiality of information disclosed, whatever it is disclosed, ensure it is protected, not to use confidential information. Sometimes you might be required to disclose as required by law. If income tax raid happens, ED raid happens, CBI suddenly comes, Harshad Mehta case, if you're dealing with that company, you have to disclose necessary information. That is confidentiality. Let's see, anything institute does not disclose, not to use confidential information, not to disclose, take reasonable steps to ensure personal and accountant control. Confidentiality serves public interest, it's free flow, disclose required by law sometimes, yes, authorized by clients, professional duty to disclose, comply with requirements of peer review, yes, legal proceedings. Confidentiality should be applied cautiously with justifiable legal or ethical grounds. Okay, I hope this is fine. Then professional behavior. Shall not make exaggerated claims. In my previous firm where I was working, this used to be a constant issue because we wanted to get clients, and I think in our firm it is not an issue, but in the industry, finance industry, I see that lot. You see a lot of advertisement. Invest with us, make money double in 2 days, right? Compound, continuous compounders, or what you say, multi-millionaire, multi-baggers. Chumma they will come and tell nothing is going to be true. Exaggerated claims. You come, sir, we'll do the work in 1 day. You don't worry, sir, I'll make sure that your revenue will be doubled in 1 year. Exaggerated claims in the process of getting more business to convince the client, to convince the people, or sometimes to show off that you are something extraordinary. You make exaggerated claims. Please don't do that. Shall not make despairing references or unsubstantiated comparisons. If you're not sure, don't make a comment. Simply telling Infosys is a great company to invest, TCS is bad. Some personal opinion, you will have some bad experience maybe, and you would say that this is good for investment, not good for investment. In the discussions also you tell this company is taking a particular income tax benefit, so I'm trying to use it for all other clients. Don't make these unsupportive, unsubstantiated comparisons and opinions. Does professional behavior. Yeah, I think that's all. No, then we'll come to conceptual framework. Okay. Yeah, so this professional behavior would be this. So this talks about the fundamental principles. So complying with the code means where if other laws are there conflicting with your code of ethics, other law will prevail. Fundamental principles is what we have just covered. After this, we should go to conceptual framework. Okay. So, what is this conceptual framework? A chartered accountant shall apply the conceptual framework to identify, evaluate, and address threats to compliance with fundamental principles. What are fundamental principles? Not your fundamental duties of constitution. What we just learnt now. Integrity means honest. Objectivity, no bias. Professional competence, have necessary knowledge. Confidentiality, not disclosing to others. Professional behavior, conducting yourself in a proper manner. The fundamental duties, are there any threats to this? You should identify. Are there people who are likely to cause the problems in this manner? Or any situation could come, or any structuring things are there which can affect your conducting fundamental principles. Identify the threats, evaluate, address, either eliminate. You have to leave the company, maybe you should maybe report to some people, or you might write a information, or you might have to contact your legal counsel, contact institute, or maybe contact any other lawyer. Maybe you have to identify, evaluate, and take necessary steps. And exercise of professional judgment. Let me just go to the my points. Identify, evaluate, exercise professional judgment. Again, these are judgmental point. These are subjective elements, but I can't help. You make a call is what they're telling. See, even in cricket, right? When you appeal leg before the wicket, if the third umpire is not able to make a decisive call, what they will tell? Umpire's call. You know, umpire's call. If there are no defined rules, then they say umpire's call is final. Like that is what they're telling institute. Every time you can't say black and white. Use your professional judgment. You have your experience. You have seen so many cases happening in social media, in your experience, in the profession. You would have learned, heard, seen. Apply your judgment. Is that case need to be reported? Is that case need to be discussed? Or is this case has any merit? Is there really issue happening inside the organization that recommends your action point? Should you really come out? So exercise your professional judgment, and if you want, you can also go and inform third party, maybe your peer person or person in the organization, or it might be a person in the legal counsel, in the sense it might be a statutory compliance officer, or it might be institute as well. So you provide within the framework. So in exercising professional judgment, obtain the understanding of chartered accountant might consider reason to be concerned. There is a inconsistency between known facts and circumstances. Accounts expertise, experience are sufficient. There is a need to consult others. The information provide reasonable basis. Accountant's own bias might be affecting. So if there are issues, circumstances are not sufficient, accountant is not providing evidence, you are not allowed to enter the factory premises, the financial statements, transactions are not or the balances of yours not verifying or not matching with the vendor balances, vendor reconciliation not happening, statutory payments not happening, you see continuous issues, management not replying, things on those lines. Reasonable and informed third party. The reasonable and informed third party test is consideration by ICI about whether same conclusion would likely to be reached by another party. In the sense, you have made a decision, yes, there is a threat, management is not giving enough support. If you were not there, if somebody else was there in your position, would they have come to the same decision? Yes, that's what it is, reasonable and informed third party. So this discussion talks about part 1, complying with the code, fundamental principles and conceptual framework. Then we have to move to part 2, applicables for chartered accountants in service, means those who are in employment particularly. We have to go through it one by one. Quickly, if I run through it, if there is conflict of interest, preparation, presentation of information, acting with sufficient expertise, incentives linked to financial reporting, inducements like giving gifts, responding to non-compliance with laws. If somebody is not following rules, how do you give a complaint? Things like that. And pressure to breach fundamental principles. Anyway, we'll have to go through each of them in detail. That will go after this. Okay, so let us take up some problems now. Infostar is a listed company engaged in the provisions of IT services in India. Companies engaged, very good, in IT services. The directors are paid a bonus based on the profits achieved by the company during the year as per the table given below. Range of profit after tax, bonus to directors, less than 1 crore profit, nil bonus, 1 to 5 crore, 2%, 5 to 10, 4%, 10 to 20, 6%, 20 to 30, 8%, and 30 and above 10%. So what does that mean? If company makes more profit, directors get paid, which is perfectly fine. Auditors should not do like this. Directors can do. They are the management. They are the one who performing the operations of the company. So their in salary or remuneration linked with the company's profitability, absolutely fine. The draft statement of profit and loss for the year ended 31st March 2002 currently shows a profit of 2 crores. Okay, currently 2 crores. That means you will come under second one. So 2% net profit is what is applicable. Issue on 25th March, Infostar Limited sold the land located adjacent to its head office to a third party for a consideration of 40 crores. So they have sold some land with an option to purchase the land back on 25th May at 40 crore plus premium of 6%. Okay, they are selling the land and option to purchase the land back. Amount received from the transaction eliminated the bank overdraft. Okay, on the instruction of chief financial officer of the company, who is the chartered accountant, the transaction was treated as sale, including profit or loss arising on disposal of statement of loss for the ending March. Discuss the ethical and accounting implications in the above, referring to 11 Ind AS wherever applicable. So that's the kind of questions you can expect in exams in FR paper. They will include a concept of Ind AS like in this problem, and they will also include an element of ethics. So what is the element of ethics and what is the element of Ind AS in this problem? They have made a sale but with the option to purchase it back. Sale and buyback is not to be accounted as sale because substantial transfer or the 5 conditions as per Ind AS 115 did not happen. Even otherwise, sale of land is not a sale in normal course of business. And that too, you are taking it back. So when something is coming back, you cannot recognize it as a sales, because as per GST is different thing. As per Ind AS 115, goods sold with the option or an obligation to take it back does not amount to transfer. Is that correct? Because the word control is not transferred, something coming back. So control is not given. The sale of land meets definition, revenue from contract with customer. Repurchase agreement, yes, that is a technical word you have to use, repurchase agreement. And therefore control is not transferred. It must be treated as financing arrangement, means you are selling, receiving the money. Don't report as selling, report it as loan taken. And when you purchase the land back, you pay the money, then you don't show it as purchase, you show it as a loan repaid. So it's not sales but loan taken, it's not purchase, it is loan repaid. So should not have recognized from the financial statements. So recording the above transaction is attempt to manipulate the financial statements. The sale must be reversed. Yeah, that's what there. Okay, that is the Ind AS element. It's not a sale, it's a financial arrangement. What about ethical issues? Chartered accountants are required to comply with ordinance. This includes integrity. See, you have to use these terms, right? Remember what and all we have learnt. Fundamental principles, integrity, objectivity, professional competence, confidentiality. I can also talk about professional competence. And I'm going to also talk about integrity. One, if you don't know this point, that means you are negligent, you are not competent. If you know it, still did not object, then it's a problem of integrity. Got the point? So I just want to go back because if you can also say from the schedule 1 members, you have to provide you have to provide, what is that? No due diligence, you see. You have to provide due diligence, you have to perform professionally competent, those kind of things. You can also make use of such information if you are an auditor of a company. So it appears the integrity of a CFO is compromised, and it is not alone. The effect of sale is therefore year and is immediately profits. Accountant must also act with objectivity, which means they should not allow bias. Further necessary to comply with principles of professional behavior. You see, whatever the points that we have learnt as the elements, right? What elements here? Professional fundamental principles, integrity, objectivity, professional confidence. Those things you can mention here. This gives you fact, do not make whether CFO is aware or not. If he is aware, still apply income statement, does not comply with the principle of professional behavior. Yeah. In such case, he is subject to professional misconduct under clause 1 part 2 of second schedule of Chartered Accountant Act. Part 2 clause 1. What is part 2 clause 1? You are having schedule 2 and part 2 clause 1. Schedule 2 part 2 clause 1 contravenes ICAI regulations. That is, you have to follow all the necessary expertise in making an opinion or when you are part of financial reporting preparation. Okay, so in the examination, how you can present the answer? A question like this. First line. I think question only are given. Ind AS impact or financial reporting impact, ethical impact. When you talk about the financial reporting impact, you should quote relevant Ind AS, like in this problem, Ind AS 115. And then ethical issues, where you have to quote relevant the elements of fundamental principles. So in the examination, what you can present? Facts of the case. Company has given company has sold an option to buy back and is treated as profit for the year. facts of the business, analysis, conclusion. In the analysis, you can divide this into two parts. One is Ind AS issues, other is ethical issues, and the conclusion. It is recommended the accountant should raise a concern with the appropriate authorities. First, should raise a concern internally. If not given any response, then you should take appropriate action elsewhere. You should write like that. As per the guidelines, a member of the institute who is employee shall exercise due diligence and shall not grossly negligent. Okay. So he must, applying these provisions, you should not let this happen. If the management decides to happen, you take the necessary course of action. That should be your conclusion. Okay. Rustum Limited, a company engaged in oil extraction, has a present obligation to dismantle the oil rig installed by at the end of useful life of 10 years. Before even reading further, can you guess what Ind AS could come here? You have an obligation to dismantle, provision for dismantling, decommissioning, obligation to remove, clear. Ind AS 16, Ind AS 37. Ind AS 37 says the obligation to dismantle, take a present value, recognize that as liability, present obligation. And Ind AS 16 says the obligation to dismantle is also an element as part of cost of the asset to be capitalized. So you recognize an asset and you recognize a liability at present value. The asset will be depreciated, will become zero, and the liability, you unwind the discount, the interest will be added at the maturity. This liability would reflect amount of obligation to be spent for dismantling. Indirectly, we are telling cost of the asset, when we pay something, that is the cost of the asset depreciated over useful life. So amount spent at the beginning, obligation to dismantle, the money might be spent later, but that is also represents benefit over a period of time. If I want to use the asset, I have to pay it at the end of it. Therefore, I have to capitalize and amortize, and that amount will be paid at a later point in time. In simple words, Ind AS 16 is telling amount spent and amount going to be spent, both should be capitalized. Okay, that's what Ind AS 16. If not, I quickly revise things for you now. Rustom Limited cannot cancel the obligation or transfer it. Rustom Limited intends to carry out dismantling work itself and estimated the cost work to be 100 crores. You should not recognize 100 crore, present value of 100 crores. And gradually, over a period of time, when you unwind the discount, that is getting compounded, interest getting added, it will become 100 crores at the end of 10 years. The directors are aware of the requirements. Oh, they know it. Very good. They are aware of the requirements of Ind AS 37 provisions, contingent liabilities and contingent assets read with Ind AS 16 property, plant, equipment. However, they propose whom? They propose to expense the cost of dismantling to the rig as and when incurred with no entries or disclosure in financial statements. They argue that application of Ind AS involves judgment, and although prudence is mentioned in conceptual framework, it is not only one among the many ways of achieving faithful representation. Discuss whether directors are acting ethically in the above instance, what should be the practicing chartered accountants course of action in this regard. Again, the contention of the matters, you know it. Expense, dismantling cost should be recognized at present value and then depreciated. And you cannot say I will incur the expense and then I claim I mean, I'll incur the cost, then as and when I incur, I claim it as expense because the benefit is for a longer period of time, and matching principle prevails over anything else. And for faithful representation, when you know something, even standard says it is not appropriate. So the treatment proposed by director is in contravention of Ind AS 37 and Ind AS 16. So though directors can exercise strong undue influence, the chartered accountant is bound to act with integrity and remain unbiased. Company people can put pressure. It is your obligation, fundamental duties and principles to remain integral, to remain honest, apply professional competence and due care, and exhibit professional behavior. In days 16 and 37 must be complied with. So if you are auditor, you have to give your disclose whatever the statement in the auditing opinion, you have to mention this. It is essential the chartered accountant to inform those, that is in directors, about this contravention by upholding the fundamental principle of professional behavior. If he does not communicate the fundamental, okay, will be breached. Don't write like this in exam and all, okay. By following professional behavior, yes, you have to inform the directors. If you don't do it, you are not following it. What is this? That's obvious. No, don't repeat like this in exam. One sentence sufficient. Members should comply with relevant laws by knowingly allowing directors would not be acting due diligently, or in such situation. Clause 567 of Part 1 second schedule. Clause 567 of 1, 2, 3, 4, 5. Not reporting material misstatement, due diligence, not obtaining sufficient information. So those things is what they are mentioning. Clause 567, yeah, that's what they just mentioned. So same process you follow. You say initially facts of the case, company is under obligation to repay, but directors have taken another opinion. Analysis, Ind AS, what does Ind AS says? What is ethical consideration here? Conclusion. Conclusion is the chartered accountant, relevant CA should inform the directors following fundamental principles. That's how you can conclude the answer. Okay. Good. Okay. So after completing part 1 of Code of Ethics in Financial Reporting, we'll move to part 2. Just to give an overview, this part 2 is applicable to chartered accountants in service, means those who are primarily in employment. And so what and all to be kept in mind, and what are all things that will come? Conflict of interest, where you are obliged to perform certain duties as an employee, but you also have to perform duties being a professional. Preparation and presentation of information, acting with sufficient expertise, incentives linked to financial reporting. For example, directors will be paid a percentage of profits. So, reporting of such profits becomes crucial. Inducements, that is like sharing fees, giving gifts. Responding to non-compliance with laws, if somebody is like a people who are supposed to follow rules, not following rules, and you being a part of the organization may have to give a complaint. Pressure to breach the fundamental principles. Fundamental principle means this: integrity, objectivity, professional competence, care, confidentiality, and professional behavior. So we have these headings to be looked at. Let us take a look at one by one. What is the meaning of conflict of interest? I hope you are able to see the chart, right? Because only one chart is there. This one chart will take care of all the varieties that is required under this element. That is part 2, chart accountants in service. Just one second. So I'll just go to the institute also in that respective portion so that we can also keep that available as a reference with us. Part 2, Chartered Accountants in Service. Conflict of interest. A chartered accountant shall not allow conflict of interest to compromise professional or business judgment. Examples of circumstances: serving a management or a governance position for two employing organizations and acquiring confidential information from one might be used by chartered accountant to the advantage disadvantage of other organization. So, you being a chartered accountant will be interacting with multiple entities. Like you have gone to a, let's say, vendor of a company to acquire certain statements. And in that statement, you observe that the information which may be quantity related or a product related, something anomaly which you found out can be used by other organization. You cannot go and tell, see, these people are doing like this, you also follow, or you make use of this. These people are submitting a tender in an organization to get the business, you also go and submit the tender, and I saw their reconciliation statements, they usually charge at this price, you also go and quote this price, you'll get it. Such kind of things should not be done. So what are those information? I mean, examples I've given. Let's go to one by one. Examples may be like two organizations is what I just told you now. Then conflict identification. So if you find out any of those circumstances where there is possibility of getting conflicts, there might be a director having his own organization, and he will tell you, please don't tell that I am charging more price. No, transfer pricing, related party transactions. The director says, you, because anyway you are doing all these reconciliation verification, you have access to the records of both the companies, and the director will tell you, I am charging more for my company. In this company, I'm also director in this company, but here I have more shareholding. This is my own company. Here I'm just director like an employee. So I'm transferring goods and services at a higher price. And he will say, you also don't say it outside. I'll pay you something. Keep quiet. So you have to identify any of those conflict of interest that can be rise in conflict identification. A chartered accountant shall take reasonable steps to identify the circumstances that might create a conflict of interest. You have to understand the relevant interest between the parties and activities and implication of relevant parties. Like I just told you, a director running his own, let's say, professional or goods business, he is providing certain goods, certain chemical components, certain equipments to the other company as an input. So director is running a vendor company, and whether he is charging at a fair price or not, whether wherever possible, when you know that being a person who knows such information, and if you don't disclose that information, that will affect your fundamental principle like integrity. But if you disclose certain information and that becomes, you're an employee or you're employed by that organization, you are maybe a consultant with the organization, and it is against their principle. So you have to manage both. So conflict identification, identify whether there is any conflict like that. Then threats created by conflict of interest due to that conflict, difference of opinion, difficult situations, confusing situations. What are the threats that are being created? What are the issues that are being created? In general, direct connection between the professional activity and the matter on which parties interest conflict more likely that threat is not an acceptable level, because there will always be some sort of threats, my dear friends. Conflict will be there. You can't completely eliminate it. That's like a risk in an organization. Like, you are a CFO of a company, right? Chief Financial Officer of a company. Or you're working with like a consultancy on financial, like a virtual CFO service you're providing. You prepare monthly financial statements. And in general, in that organization, everybody will get a share of profit. You being employed with the company also get a share of profit. So on one hand, you are preparing the financial statements. On the other hand, you are the receiver of the share of profit. So there is a conflict, right? You are preparing the financial statements and you are receiving the profit. There is element of conflict. You can't completely eliminate it. See, for example, credit ratings. Now, who will give credit ratings, you tell me? I mean, not directly related to this point, but to tell you that there has always been a conflict of interest situation. But the question is whether it is at acceptable level or not. So, credit ratings will be given by credit rating agencies like CRISIL, ICRA. Now, who will approach CRISIL? For example, if Reliance wants to take a loan, in the sense they want to raise bonds or issue papers, they go to the CRISIL and say, please rate my bond which I am going to issue to public. So the person who are issuing, the agency is issuing it to the company and the company is paying the fees. So when somebody is paying the fees and you have to rate them, there is not much of objectivity, right? Like there is, you can't expect complete unbiasedness, though professionally they should, but there will be certain level of conflict. Somebody paying you the fees and you have to rate them. There is, you always think, right? They're paying the fees. What if I don't give the good rating? They may not pay the fees on time. They pay me less fees. Or they say somebody else will give a better rating. I'll go and take rating from them. It's also a business after all. Conflict will always exist. That cannot be completely eliminated. To what level is what they are trying to identify here. Example of action might eliminate threats created by conflict is withdrawing from the decision making process related to the matter giving rise to the conflict of interest. So CFO services, if you are part of it, if you share of profit, then what you can say is I will automate the process such a way that I will not be involved in preparation of accounting. You please employ some other person or some other agency on preparation. I will only come and review the process. So you are not part of that whole process, right? Things like that you can exit. You can what do you say, withdraw yourself from the decision making process is one of the action that can be taken. Then you disclose consent. Another example of things can be your wife is running a business which is dealing with the company where you are part of. Related party transaction, disclose such fact. See, in this company, my wife holds about 40% of interest. So things like that you have to disclose and take a consent if required, take the permission if required. Okay, in that context, I think let's also read one question here. I think my metal also should have it. Okay. Anyway, let's have that question. Alop Limited directors feel that Company needs a significant injection of capital in order to modernize the plant equipment, as the company has been promised the firm if it can produce goods of international standards, they need loan. The current lending policy of the bank, okay, you have to take the money from bank, require prospective borrowers to demonstrate projected cash flows. Of course, if some lender is giving you money, he will look at your future cash flow earning capacity. Only if that is strong, then they'll give you loan. It is applicable even for personal, individual situations. Only if they see your paying slip, that is your income generating capacity, repayment capacity, then only they'll give you the loan, and that's what it is there. And they want debt service coverage ratio exceeding 10. Current projected statement cash flow does not satisfy bank's criteria for lending, but directors have told the bank that the company is in excellent financial position, the financial results, cash flow projections will meet the criteria, and the chartered accountant will submit the report to this effect shortly. The chartered accountant has recently joined Alap Limited, has openly stated that he cannot afford to lose his job because of financial commitments. Discuss the potential ethical conflicts that may arise in the above scenario, the ethical principles which would give chartered accountants respond to the situation. So this is the typical situation of conflict, right? You are a chartered accountant, you have joined the company recently, you are in employment, the company is taking loan, and company taking loan is essential for its survival, for its expansion, for its growth, so that it can produce goods of international standards. But the banks is not giving loan because financial ratios are not satisfying the bank's requirements. So now, will you say that directors, I support you, you go and take loan, let's see what will happen, we are confident of our business, we are doing good to the society, we are doing good to the customers, financial position today may not be good, but it will improve, right? You can say that. That's why I told you in the previous session, right? It's not just the end, it's the means also that matters. You might not be doing anything illegal. You are doing all the goods, services for the best of customers, for the best of shareholders, but you cannot change the figures to suit the requirements to take loan from the bank. That's where the conflicts comes. You are lying, but you are doing good thing. Your lying is a means. Doing good things may be an end. You have to make sure both are correct. You can't argue that no, my end is good, my means are wrong. So that's what's happening here, and that's the conflict we are talking about. Doing good for the company, but telling not the real facts or the ratios of financial company, a typical situation of conflict of interest. Obviously, there is a conflict here. Chartered accountant should be ethical, should not tell facts and figures which are not facts, which he knows to be true. If he does not know, it's a secondary situation. You have to obtain sufficient information, maybe from external parties, etc., and then you take the position. But in this case, you know it, that is not the correct position to lie otherwise. So, pressure to obtain finance and chartered accountant personal circumstances, duties of shareholders or employees in bank. That's where the conflict comes. The director's ethical principles, yeah, you have to talk about objectivity, integrity, professional competence. So when you say conflict, right, you have to say what are the nature. You have discussed here, right? Remember, we have discussed the basic principles, fundamental principles: integrity, objectivity, professional care. Integrity means being honest. Objectivity means not having bias. I'm working in this company, so I'm favorable to this company. No. Professional competence and due care, you should be knowledgeable, having sufficient information and application of mind to make decisions. Confidentiality, professional behavior. So if you can mention, you have to mention these points while discussing about conflict of interest. Appropriate action, chartered accountant face immediate ethical dilemma and must apply his moral and ethical judgment, and he should put interest of company and professional ethics first, insist report of the bank to be honest on the company's current financial position. This is in the long term interest of company and its survival. Hope you got the point how we are going to approach this question. What is the facts of the case, what is the analysis, and what is the conclusion. Facts of the case, that company is in financial tight liquidity position, in need of money, and directors are planning to report to suit the requirement of the bank's ratios rather than what is the existing financial ratios of the company. And chartered accountant being employed is in a dilemma. So that is the facts of the case. Issues: on one hand, taking a loan is ideal for the company to expand and survive. On the other hand, the ethical consideration is you're not following fundamental principles of integrity and objectivity. Conclusion: you don't have to write too much, depends on marks you can judge, like 2-3 sentence in facts of the case, 2-3 sentence in analysis, and 1 or 2 lines in conclusion. Conclusion, as I just told you, uh, it is advisable for the chartered accountant to keep the professional interest first, to take the ethical consideration as the priority, and report what the real facts to the bank. This is in the long term interest of the company rather than the short term requirements. So like this you can conclude your answer. Okay, let's go further. Yeah, you can also mention that if you submit an incorrect statement, it will go to clause 1 part 2 of second schedule. Clause 1 part 2 second schedule. What is a clause 1 part 2 second schedule? Let's go to our chart. Clause 1 part second schedule part 2 contravenes ICI regulation. That is basically submitting false statements. That's what is, he contravenes the provisions of the act or regulations. That is where he is being, that is will be amounting to professional misconduct. Okay, so that's the first point regarding conflict of interest, where we discussed about conflict identification and threats, and maybe how are you going to disclose, or you can withdraw or disclose at consent. That is the part of conflict of interest. Now, preparation and presentation of financial information, what is that ethical issue we are going to find? When preparing and presentation, chartered accountant shall present the information in accordance with reporting framework. That is, you have to follow prudence principle, accrual principles, things like that. As per AS 15 or Ind AS 19 employee benefits, you know that gratuity provision should be made every year, whereas actual payment might be done 50 years later, 15 years later, but you have to provide every year, because that is where the matching principle applies. Employee might leave at the end, but the benefit of his employment is received by the company when the employee is working on accrual principle. It should be recognized on periodical regular basis, whereas directors may argue, why to show those expenses now, why to reduce profits, let's show more profits when we make the payment. At that time let's show more, let's show the expenses. You are employed by the organization, you also feel like, right, oh, let's companies show more profits, companies listed in the market, let shareholders also make more money, right? But that is in the short term interest. In the long term, when the payment situation comes, that will be a disaster for the company, right? So things look those kind of things. Anyway, while preparing in accordance with the relevant framework, you have to follow: prepare present information in a manner that is intended neither mislead nor to influence contractual or regulator completely inappropriately. So we have just discussed an example, right? Submitting a financial statements to bank and to change the figures to suit certain ratios. Exercise professional judgment to represent facts accurately, describe clearly true facts and nature of his activities like true and fair view, faithful presentation, if you remember in FR we discussed, classify record information in a timely properly manner, not omit anything in intention of rendering information or misleading influence contractually or outcomes inappropriately. Okay. Basically, you prepare the financial statements or prepare the information as it is. It should not be false. It should not be for misleading purpose. It should be within the reporting framework. Example of influencing contractual outcome inappropriately is using an unrealistic estimate with the intention of avoiding violation of contractual requirements such as debt covenant or regulatory covenant such as capital requirement of financial institution. What do you mean by this? Just for example purpose, anyway, we will have example also. Let me tell you quickly. Certain banks might insist you if you don't make 10% profit in the first 5 years, if you don't make 10% profit in the first 5 years, 10% profit on sales in first 5 years, then the 6th year the amount will be repayable on demand. The loan has to be repaid by the company, some conditions like this. So bank, I mean the company, if don't show profits, you end up paying, you have to repay the loan. Not good for the company. So when banks, when the company is under such pressure, you tends to use certain estimates, unrealistic estimate, show less gratuity, show less depreciation expense, show less the employee benefit expense, like you will have this actuarial and all, you take one actual certificate but you show some other expense. Lease, you don't provide for 10 years, you just know, so it's only you provide for present value 5-year lease, knowing that you are going to extend as well, things like that. So you try to change the facts and circumstances to get suit the requirement of the bank so that loan will not become repayable. So those kind of things are example. Of course you should not involve in those situations. So it has to be in accordance with relevant framework. What you have just read now, in accordance with relevant framework. That's what this one point is there. So in the examination, day before examination or during your revision, you no need to go through the entire study material like this. You just come to my chart and read, oh, this one point, preparation of information in accordance with reporting framework. Sufficient. One point will cover all these points. It should not be intended neither to mislead nor to influence. Use of discretion of estimates. You can also, okay, it will come later, but I'm just covering it now. Relying on work of others. Actuarial certification you might have to take. Entirely you cannot judge, right? If you are valuing certain, let's say, chemical elements, or if you are valuing construction, I mean the building value of a real estate company, take the help of a registered valuer. Every element cannot be verified by chart accountant. I know chart accountant is expected to be a superman, but in reality you are not. In the world, things are becoming so complex, like I think I was referring in the earlier session also, cryptocurrency. Somebody is investing, trading in Bitcoin. Now this artificial intelligence, chat GPT is taking away the work job of so many people, and so many companies job also, right? Many companies revenue model also is getting disrupted. And if you are investing, you are a company investing in other small private companies, and because of these inventions, those private companies valuations might be affected. Every small, each and everything you cannot assure, you cannot learn, rely the work on others, and addressing the information that might be misleading if something is wrong, and how are you going to, what you're going to do with that. Anyway, let me just go to institute material also. So use of discretion in preparation of presentations. You have to make professional judgment in case of estimations. In sometimes the bills may not come. See, for example, you have to prepare financial statements every month internally for MIS preparation, but the Airtel bill will come only on 10th of every next month. So every month within next 2 days you have to submit to the management last month what are the profits and losses and what is the financial position. Or banks, when they've given loan, might require you to submit on a monthly basis or a quarterly basis certain statements, certain information. But certain invoices have not come, is yet to be coming. Example, even your auditors who raise the bill only at the end of the year, right? But quarterly you have to prepare. Even for listing companies, quarterly financial statements you have to prepare. So in those cases, you make a reasonable assumption, make a provision. Professional judgment are required. Determining estimate, fair value estimates, accounting policy, timing of transaction, sale of asset, determining the structuring of transactions, all accounting part. I'm not going too much into it. So these are the examples where judgments are required. So while performing the activities, you shall exercise judgment, purpose for which information is used, context which is given, audience to whom it is addressed. Okay, so you have to use discretion, apply judgment. That's the only point I'm trying to tell here. Then relying work on others, as I told you, everything will not be under your control. Everything you will not be able to value it. You need to take the help of others, individuals, other professionals. Intends to rely and work on others, either internal or external, shall exercise professional judgment, what steps to take. Then addressing the information that is might be misleading. Okay, this let's read it little slowly. If there are information which are likely to be misleading or that is likely to be false, how do you address such situations? Okay, let's read this. Let's read this slowly. When a chartered accountant knows or has reason to believe that information with the accountant associated is misleading, accountant shall take the appropriate option to resolve the matter. The action might include discussing the concern, the information misleading, with the chartered accountant superior above you, like you are a junior management personnel, a head will be there, maybe CFO, discuss with him and ask him his suggestion, what can be the how we can resolve the matter. Then having and appropriate levels of management. Okay, the chartered accountant superior and or, that means in conjunction with, or if you don't have a CA above you, any the management above you within the accountant's employing organization, or those charged with the governance, and requesting such individual to take the appropriate resolve matter, having information corrected if the information has already been disclosed, informing them of correct information. It might be that you have to submit a statement to a bank which happen to be containing certain wrong facts and circumstances. You go and tell your CA above you, there is a mistake here, please let me know what we can do about it. If there is no CA, go to the management. See, there is a mistake here, let us take the corrective actions. If they also don't having anything, then those charged with governance means going to appropriate authorities, maybe MCA, maybe SEBI if it is listed company, or income tax department, those charged with certain governance. Or in internally only there will be certain people like internal control, internal auditors, or there will be some review people, committees inside the organization. You can go and inform them. And then most importantly, for example, if those statements are submitted to the bank, go and inform the bank these things are incorrect, these are the corrected statements. Inform the intended users. Chartered accountant might determining employing organization has not taken appropriate action. Okay, none of the people above you, management, people charged with governance. Okay, I think here when they say governance is internal, not external, they have not taken action, then take the help of. This is a constant answer you can give it for any question. Okay, this thing what we are discussing now, you can follow this process in most of the questions under this discussion. What is that? When you have a issue, they'll ask you what is the appropriate action you are going to take. What will be your response if you know something is going wrong? The first step is go to the CA above you, then go to the management and those charged with the governance. And then you take, if not, if these three does not happen, you go outside. You can take an exam, you can consult with the institute, meaning our institute, SEI, or you can speak to the auditor, or you can even refer legal counsel like lawyers. In such process, you can make sure that third parties, including confirmation, information, data you can obtain, regulatory oversight authorities like anyway, you can take help of third parties, what they meant. If after exhausting all feasible options, chartered accountants determine that appropriate action has not been taken, there is a reason to believe information is still misleading, accountant shall refuse to remain associated with the information. It might be appropriate for chartered accountant to resign from the employing organization. Ultimately, you have to come out. That's the final thing. So, 3-step process, can you remember? First, you inform the management above you. Second step, you go to the outside people. Outside people can be institute, your colleagues, your legal counsel, internal external auditors. And then if management did not happen, people above you, after consulting with them also, informing them also, things did not turn out to be as per your expectation, then only thing left out is resign. This approach you can give it for most of the questions. Let's quickly read from my summary points. Presentation of information, it should be in accordance with the framework. If something is intended or have misleading or false information, that is where you should take appropriate actions. You can use discretion, professional judgment, you can rely on work on others, and ultimately you have to address that information is misleading. Addressing means the steps which I just have told you. Those steps I have not written here because those steps can be used in most of other conflicts and most of the other issues that you find. Okay, let's go further. Sunshine Limited is a listed company in the cosmetic industry, has debt covenants attached to some of the borrowing which are included in financial liabilities in the balance sheet. Debt covenants means certain conditions are there. Like I told you, right? The loan might become repayable. The promoters have to bring in some loan, or if you don't perform certain things, you may have to give more security, like a more pledging, those kind of things. These covenants mandate the company to repay the debt in full if Sunshine Limited fails to maintain liquidity ratio. If you don't maintain liquidity ratio means current ratio, current assets by current liabilities. If you don't maintain certain ratio, the loan will be immediately repayable, and operating margin above specified limit. One more ratio. The directors along with the CFO of the company, who is a chartered accountant, are considering entering fresh 5-year lease agreement, but are not concerned about the negative impact any potential lease obligation that may have on the above mentioned covenants. What does this mean, guys? Ind AS 116, when you enter into a lease agreement, there is no classification of operating lease, financing lease, unlike AS 19 in Ind AS 116 from the point of view of lessee. There is, when it is 5-year, it is long term. That is, you have to recognize ROU asset and lease liability at inception of contract. Lease liability equal to present value of lease payments that is going to take place. Take the present value of it and recognize it as a liability immediately. So when you take a liability, it will affect your debt equity ratio, it will affect your operating margin, because you're going to claim depreciation and not just interest expense. On the ROU asset, you claim depreciation, and on the obligation, you claim interest. Your margin is affected, your liability liquidity position is affected. Accordingly, director and CFO propose lease agreement should be drafted in such a way that series of 6-10 leases rather than single 5-year, to utilize short-term lease exemption available under Ind AS 116. So if it is less than 12 months, short-term lease, you can claim the expense, you need not show it as a liability. So instead of making 5-year, 5-year means 60 months, right? 5-year into 12 months means 60 months contract. Instead of 60 months, one contract, you make it as 6-10 months contract. 10 months, 10 months, 10 months, 10 months, 10 months, 10 months, 3, 4, 5, 6. So this also is 60, and this is less than 12 months. So make 5 contracts so that Ind AS 116 obligation reporting will not come. This would enable the accounting of the leases in the long term. Directors believe this treatment will meet the requirement of debt covenant through such act may be contrary to accounting standard. Discuss the ethical consideration. Right? So you are trying to force fit yourself to the requirements, but the fundamental principle what we follow in accounting or reporting is not legal framework, it is substance, right? Substance in form, substance over form. We never look at ownership of an asset, we always look at who is the real beneficiary of the asset, and that person will claim depreciation, and that person will show as asset in his balance sheet, even though he don't own it, but he use it like an owner. So whether it is 10 6 months contract, 10 months 6 contracts, 160 months contract, that is for legal purpose. In substance, for us, it is 60 months contract. When something is likely to be renewed, even the extended period should also be considered. So it's clearly violation of Ind AS 116. So as a CA, if you are a CFO, or even if you are a junior level, if you identify this information is misleading, you have to take appropriate actions to correct this. So lease agreement, you have to present in substance presentation. Just because legally you say 10 months 6 contract. That's not the correct way of reporting. Directors are ethically responsible to produce financial statements, and these actions are deliberate attempts to circumvent, to avoid the situations mentioned in the loan agreement. So this would form a off balance sheet item. As a result of proposed action, liquid ratio would be adversely misrepresented. So that's whatever they're doing is wrong. You have to mention that in different sentences. Sunshine Limited is aware the proposed treatment, so they are aware of it also. Such manipulation is a breach of fundamental principles of objectivity, integrity. Objectivity, you have to be uh, not having any bias. Integrity, you have to be honest in the code of ethics. So proposals are likely to mislead the stakeholders in the entity. This could discredit their profession. Okay, that tell what and all could happen. If CFO fails to comply with these professional duties, he will be subject to professional misconduct of clause 1 part 2 of, that is again, what is clause 1 part 2 we have mentioned here, right? We discussed little back few times back earlier. That is contravenes ICR regulations. He contravenes the provisions. Okay, I think they have not told what and all the appropriate actions as a CFO or any CA in the management should do. You take the appropriate action to the higher authorities, try to bring it to their notice, then you can inform the external internal auditor, then you can inform the legal counsel. If not, then you might consider coming out of the organization. You have to follow this process. If not, you may be subject to professional misconduct. So we finished 2 points. First point was conflict of interest. Second point is preparation and presentation of information. The third one is acting with sufficient expertise. You are taking a responsible position in the organizations. The employees look up to you. The society look up to you, because when you say you are CA, you are considered to be a superman. Anyway, keeping that aside, you have certain obligations to fulfill, responsibilities. So you should equip yourself with sufficient expertise. Like in the current day context, knowing Excel is an essential element. I'm not telling Excel is everything, but knowing certain things can help you perform certain duties better. Recently, I've been to a CA office to teach them about the advanced Excel functions. There are so many new formulas have come, new methods of doing it. Better audit sampling can be done, better audit tools can be employed just using Excel. You have, and surprisingly, one of the senior partners sat throughout the session. I was surprised. I was pleasantly surprised. Hats off to his commitment. His eagerness to learn. That's what is required. See, that's what I'm trying to tell. You would have done the CA examination just now, but 10 years later, 20 years later, things will keep evolving. Being in CA business, professional of a CA is like running on treadmill. To stay where you are, you have to keep running. Now, see, when I was doing articleship, primarily we will be doing Tally, QuickBooks and SAP. And now Zoho has come. We should be proud. Zoho is an Indian brand. Sridhar Vembu sitting in corner village of Tamil Nadu and building an empire of an IT company which can withstand even things like Google, Facebook. You should be proud of it. Zoho books have come. You have to learn. You can't say, no, that I don't know how the configuration will look like. Even SAP for that matter, Oracle and whatever it is, each configuration will be different. You have to learn about technology, data privacy, bill has come. You should know those things. You can't say that I did not know that my laptop should not have pen drive facility, pen drive disabling facility. The no, I don't know is not an excuse. I don't know the law is not an excuse for violation of the law. That's what they meant, acting with sufficient expertise. Let's go a little fast. This should not be difficult one. Shall not intentionally mislead employing organizations of expertise or experience possessed. Yeah, without knowing something, don't possess yourself that, okay, I know this. Don't tell that I know Python, I know income tax rules, I know companies registrations rules. If you don't have sufficient expertise, don't disclose that, don't tell that. A self-interest threat to compliance with the principle of professional competence and due care. If chartered accountant has insufficient time, if you want to verify, if you want to conduct vendor reconciliation, 1,000 vendor reconciliation you have to do every month for you to prepare monthly financial statements. If you are a listed company, quarterly financial statements must be prepared. You don't have time for all vendor verification, tedious payments, whether done under the correct section or not, whether it's a consultancy or a profession or a contract, whether section 195, that is TDS on non-resident payments, have been everything 15 CACB has been complied with or not. You cannot go through 100%, you cannot prepare everything yourself. Sufficient time will not be there. Incomplete or inadequate information will be there. Insufficient experience, or your team may not be trained enough. These are the examples. In those cases, obtain the assistance. If you don't know, learn. If you don't have people, employ. If you don't know, take the expertise from others and pay them consultancy fees. Right? So this is not a difficult one. Still, we'll quickly go through the points for revision purpose. You should act with sufficient expertise. Shall not mislead the experience or expertise. Obtain the assistance or training if required. Ensure there is adequate time and knowledge while performing duties. So, while making reporting, if you are the person responsible for TDS of an organization, it is really tedious, you should have sufficient knowledge. If not, take the help of an external person and pay the fees. Okay, let's take a question based on that. Agastya is a listed company engaged in manufacturing and automotive spare parts. The company is preparing financial statements for the year ended March 2003. The directors are entitled to incentive based on operating profit margin. You have been appointed as consultant to advise the preparation of financial statements, and you notice the following issue. Okay. Now, April 1st, Agastya Limited defined benefit pension plan was amended to increase the potential entitlement from 12% of final salary to 18.5%. Company has made a modification. It's no longer 12% payment, it is going to be 18.5% payment. So you have to provide more provision. More expense means less profit. This amendment was made due to the salary cuts made on account of pandemic. Chartered accountant has shown such increase in pension entitlement under the head employee benefits forming part of operating profit. Directors are unhappy with this presentation. They believe this pension is not integral to operations since it is paid post-retirement of the employees, and thus insist such presentation would be misleading, computing operating profit. So what they're telling, when will this amount be paid? When they leave, at the time of resignation. So it is not a payment made regularly, it is made a payment one time, and therefore it is not operating expense. If you show under operating expense, people will take it as a recurring expense. It is not. The main problem, sometimes they might be honestly wrong also. See, some people know that they don't know, and some people don't know that they don't know. Do you understand the difference? If not, no problem. But it's like telling some people know they're idiots, some people don't know they are idiots. Anyway, let's keep that aside. Some people really don't know the difference between accounting of accrual accounting and cash accounting, and some people try to play with it. But most of them, I would say, they are not aware of it. They feel payment to be done later, but accrual concept they are not aware of. See, payment might happen one time, but accrual happen regularly. The moment employee is working, the benefit is getting accrued, it might be paid later, right? Accrual concept is the primary thing we follow in accounting and financial reporting. Therefore, directors propose a change in the accounting policy so that the such gains and losses should be recognized under other comprehensive income. Directors believe this policy will make financial statements more consistent. The pension scheme is currently in deficit. Discuss the ethical consideration, whether the perspective of the consultant. Again, as I told you, this following the clear requirements of Ind AS 8 accounting policy changes or accrual principle, it has to be a recurring expense. And when there's a change in accounting estimate, you have to show cumulative effect in the financial statements. Ind AS 19 also say that it is to be recognized any loss on defined benefit pension plan to be recognized in Pondal except if it is a remeasurement component. Remeasurement component means you have a actuarial certificate, actuarial gain or losses. Change in assumption, change in estimate will be there, as a result of which if there is any amount that will be called as remeasurement loss, actuarial certificate, actuarial gain or loss, which in this case does not. Therefore, it has to be recognized as an expense. This would be operating profits by reducing potential borrow. Additionally, the directors wishes to manipulate the aspects of pension scheme. Current service cost to be given deficit, net finance cost. Okay, they have given whatever the intention is. Let's go to the conclusion part. As a meaningful addition, directors could use tools, indicators within statements. When a chart accountant discovers the company's financial position has been compromised, he has two options. They can either report non-compliance to authorities or withdraw from the engagement. That's what I told you. Even earlier, this set of actions is applicable to most of the questions. Report to the people above you, managing authority, governing authority, take the help of outsiders. If you want, you can go to the governing, whatever relevant statutes, resign from the engagement. If you don't do it, then you are affected by clause 5, 7, 8 of part 1 of second schedule. That is clause 5 talking about fails to disclose material misstatement. Clause 7 talk about does not exercise the due diligence. Clause 8 talks about guilty of professional misconduct. Anyway, that's the thing will follow if you don't inform the sufficient people. Okay, that is on point C, acting with sufficient expertise. Okay, incentives linked to financial reporting. I think this we have discussed a lot. Directors' remuneration linked to companies' profits. So, financial interest, compensation, incentives linked to financial reporting. A chartered accountant shall not manipulate information or use confidential information to get personal gain or financial gain. Might have financial interest or might know financial interest of the immediate or close family members. In certain circumstances, might create the threats to compliance. Examples may be he has the motive and opportunity to manipulate the price sensitive information, holds a direct or indirect financial interest in the employing organization, is eligible for profit related bonus, holds directly or indirectly a deferred bonus related to the profits. Okay, examples are there. You should not manipulate the information. Instances may be you are having a direct or indirect financial interest. You might be having shareholding in the company, or you might be sharing profits of the company, holds directly or indirectly deferred bonus share rights. So you are going to get a bonus share. So if you increase the share price, those shares you can sell it at a higher price. Or you have a right to receive shares, ESOP. And if the company share price increases, the ESOP you can sell it at a higher price. So those are the examples, but major point is you should not manipulate. That's the straightforward point. Incentives linked to financial reporting. Directors of Spins Limited are eligible for incentive as computed as a percentage of cash flow from operations as per Ind AS 7. Due to the onset pandemic, the company has not performed well and in fact lost cash. Very natural, pandemic, COVID. In order to meet the cash requirements, the directors are planning to dispose of certain equipments and investments. The director's opinion, since the cash generated from such sale would be used in operations, they should be presented in cash flow under operation. Whatever they want, they will try to twist it. They are selling the equipments, using that money for operation, so it is cash flow from operations. What kind of logic is that? The directors are concerned about meeting the targets to ensure security of the jobs and feel this treatment would enhance cash flow picture of the business. You're trying to have an image outside. You are trying to maintain certain image. Sometimes happens, you lose all the job, you don't have money, but to the society you have to show yourself, I'm a chartered accountant, I'm going in these good cars. In terms of living in some other perception, we usually lose our own identity. Anyway, the inflows of sale of such equipment would have potential to make cash flow from operation figure positive. Discuss the ethical responsibility. Who is an employee to ensure the manipulation does not occur. Again, same thing. First, you can tell facts of the case. The company is manipulating the information to report a positive cash flows to get financial gain. Analysis, it is incorrect as per Ind AS 7. Ethically, it is not correct. Again, integrity, objectivity will come into picture. And if you don't do it, the professional misconduct clause, the second schedule, those clauses you can mention. And you should perform recommended course of actions. Recommended course of actions will be to report to the management above, those charged with governance, report internal external auditors. If nothing works, you can also take help of legal counsel. If nothing works, resign from the engagement. So presents the proceeding sale, provides misleading picture, operating cash flows are crucial. Not only company they work, but also their professional. But okay, they are repeating. What do you mean by professional ethics? You have to maintain professional due and care, prevent the management, should prevent the management from reporting things like this. Bring this attention to the auditors. As I told you, first go to the management, then go to the auditor, take legal counsel if any. If not, you resign from the engagement. If you don't do it, clause 1, part 2, second schedule, that is, you're violating, contravening ICR regulations, guilty of misconduct. Okay, let's go further. Next question. InfoStar is a listed company providing IT services. Directors are paid bonus based on the profits. So if profit range is less than 1 crore, you get nothing. 1 to 5 crore, 2%, and so on. The draft statement of profit and loss shows a profit of 2 crores. So 2 crores means you are within 1 to 5. So directors will just get paid 2%. Employees of InfoStar have historically been paid individual performance-based discretionary incentive for last 15 years. Based on past trends and performance, the bonus amount for the year 11 would be 3 crores. So that is amount to be payable to the employees. In view of the possibility of directors not receiving bonus, correct, no, you are making a profit of 2 crores, you pay 3 crore bonus to the employees, loss you get, that means nothing will be available to directors. In view of the possibility of directors not receiving the bonus, the company poor performance, InfoStar CFO, who is a chartered accountant, unfortunately, has suggested that discretionary incentive usually payable employees could be avoided in the current year, which would result in companies reporting profits. As part of this report, report InfoStar reports employee satisfaction scores, staff attrition rates, gender equality. Oh, these and all the reporting in the annual report, all qualitative aspects, some hi-fi yardsticks, employee absenteeism as non-financial performance measures. The CFO has also told that as overall, no stakeholders reads no financial instrument anyway, and thus his aforesaid suggestion of not paying discretionary incentive would not impact the company greatly. This is not accepted. Just because anyway people don't read, just like you write in examination, anyway validator don't have time to read, you can write any stories you want, any songs you can write. One of the videos I was watching, reels, they asked the question in the examination, how did Bhima kill Duryodhana? So he wrote, Bhima killed Duryodhana by hitting, and hitting. So like this, just because some people don't read, you should not write nonsense. Just because some people don't read reports, you cannot have misleading information. That is not accepted. Of course, in CA exams, everyone will read your answer for sure. Required, discuss the ethical and accounting implications, whether appropriate from the perspective of Mr. Sushil, the CFO. His name is given, suddenly his name come here, I don't know. Maybe a practical issue could be very much possible. Okay, ethical consideration means again you should be integral, objective, integrity, objective, professional competence. You cannot mislead information. Not paying discretionary bonus, with the directors are considering so that they will get a profit of 2 crore, ensuring directors have profit. This suggestion is not legal. Company, you can also say like this, okay, this bonus is not statutory bonus. Company is not obliged to make payment. It is not contravening any law. It's not illegal. See, you can say like that, but it's not only about legal obligations, it's also about constructive obligations, right? Company has no legal obligation to pay the bonus to employees, correct? However, reason behind the non-payment of the bonus is what raised to ethical considerations. You are not paying bonus not because you don't meet the criteria, but because you want to give it to director. The reason is not ethical. It's not illegal, but not ethical. So on moral ground, suggestion is likely to have negative consequence of the company. Chartered accountant shall have to exercise due diligence. Distinguishing mark of accountancy is acceptance of responsibility in act of public interest. Chartered accountants is not only exclusive to satisfy needs of individual client, but also for society. Therefore, code contains the requirement applicable material. Okay, fine. So that is about point 4, incentive linked to FR. Coming to inducements. Inducements means giving fees, giving share of profit under the table. You want a government contract, you tell the politician or the officers, I will gift you something. If not cash, I'll give you bribe in kind. Please give me the contract. Like that, you can go to the company and say that, please give this contract to my company. I'll pay you certain amount. Dealing, settlement, inducements. Of course, officially there can be a distribute arrangement, fee sharing arrangement, those things will be there, but illegally is what I'm trying to tell. Let's quickly go through that. Inducements including gifts and hospitality. You know that purchasing manager will take the decision in certain companies, and you go and give a Diwali gift. Okay, then mango season comes, send mangoes. Then give some foreign trips to his family, keep sending to his children, his wife, so that if wife is happy, then the purchase manager will follow her words, things like that. Inducement is an object or a situation used to influence. Inducement can be gift, entertainment, giving movie tickets, political or charitable donations. All these things are called as inducements to same person or immediate or close family members. A chartered accountant shall remain alert to the potential threats to compliance with the fundamental principles by an immediate to close family member or to an immediate close family member, by or to. Your family member can give it to some other company. Please be careful. You are working in a company to induce you, to satisfy you, to 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 get praise from you. Your family member or close relative can give gift to your boss, to your employees, right? Those things. Where a chartered accountant becomes aware of such inducement being offered by an immediate or close family member and concludes it is intent to improperly influence. Because I see, I should tell you about one instance that happened. I was part of a wealth management firm, and just as of courtesy for our existing clients. So we are not inducing anybody. For existing clients, we share. Like when any birthday happened, we go and give a birthday gift, things like that. So one of our client was a MD of a big company. So we took the chocolates, and we had to meet him for something also. So we took the chocolate box with us. He said, don't give it to me. Maybe you can give it to all the people under me. I asked why. He said, see, I'm a managing director of a company. I keep getting inducements like this for favoring certain vendors to give them contracts, to buy materials from them. Right? Many people accepts, but it is just that we are not giving him as part of company. He was our personal client. We are providing advisory services to him. So we went and met him. We have nothing to do with that company. It's just that we happened to meet in the premise of the company. But he said no. He clearly will not accept any gift from outside, because the image, perception can be that, oh, some people can satisfy like this. It happens in many cases. Banks, if you're a bank manager, because some people have to take loan, they give lot of gifts to the manager, personal assistant support. In governments, I need not talk about it. That is almost mandatory. That is like another kind of tax you have to pay. I think we have to rename bribe as tax. Direct tax, indirect tax, and bribe. Three things. We should officially legalize it so that everybody can do it comfortably. Anyway, that is just a later note. Don't take me otherwise. Okay. So if a chartered accountant becomes aware of such facts, then would likely to conduct such intent exists, the accountant shall advise the close member not to offer or not to give or not to accept such inducement. Okay, that is what this point E about inducement means: to influence other person like gift, shall remain alert and shall advise the members not to offer and not to accept. Okay. Next, responding to non-compliance. Company receives a notice or company is not following certain regulations, TDS, you have deducted certain rates, they are not doing. As per certain safety standards, manufacturing company especially have to have certain internal safety precaution measures in place, but they are not followed properly at the risk of the employees. So when these kind of non-compliance happens, what should be the action of the chartered accountant? How do you respond? See, in the ground, in traffic also, when I see some people, they coming in the one way on the opposite side, especially on highways. If you tell them, they tell that it is my risk, it is my life, I am taking risk. When you come in opposite side in one way, you are putting so many other lives at risk which you don't have any rights to. So you have to complain, you have to try to report such incidents. Like this, if you develop, same thing you can do when you are part of the organization. Let's say you are working under Harshad Mehta case. Harshad Mehta case, another example where he was the only murderer who got caught. I mean, murder is an example I gave, like in the comparison. Is the only person who got caught. Other criminals not got caught. But if you are working under people like Harshad Mehta, where you know there are illegal things going on, or sometimes gray areas where your things are not very clear, there are non-compliance happening. If something is not correct is happening, how do you respond? How do you report? That will be the heading under this. Responding to non-compliance with laws in case of employment with listed entities. Chartered accountant might encounter aware of non-compliance or suspected there might be insider trading. Main issue in stock market, right? Every quarterly results, quarter has just completed, first or second week, results will start flowing and share price goes up and down, stock market will topple. And imagine a director or an employee, accountant, he will place a bet depending on the position of the company which he knows in advance. Of course, they are not foolish enough to trade in themselves, they might play in their relatives' account. But if you come across to know that non-compliance, irregularities, laws and regulation generalized to have a direct effect on diminution of material amounts, other laws and regulation do not have. Okay, you can classify whether the regulations are having material effect or not have a material effect. Anyway, a distinguished mark of accounting profession, this story they will put it everywhere, that you have to report. Distinguished mark of accounting profession is to act in public interest. When responding to non-compliance, the chartered accountants are comply with the principle of integrity. Same story they are repeating, alerting the management, tell the people above you, tell it to outsiders like auditor, and then you can even give a complaint. Enable them to rectify. Determine non-compliance where it has not yet occurred. Take further actions. Non-compliance comprises of omission or commission. Okay. Examples: fraud, money laundering, security markets like insider trading. Okay. Responsibilities of all chartered accountants. If protocol exists in the organization, follow that. Then responsibilities of senior chartered accountant in service. Senior chartered accountants have a greater responsibility. There is a greater expectation for such individuals. So you have to address the matter. If the senior accountant identifies suspects or non-compliance, same process only. Take the appropriate steps to communicate the matter to charge with governance, like there might be a internal committee or a director. Comply with applicable laws. means you have to maybe file monthly filings or reports or forms, appropriate things you submit. To the extent possible, have the non-compliance suspended or rectified, reduce the risk of reoccurrence. If happened once, try to make sure that reoccurrence will not happen, and seek to defer the commission if it is not yet occurred. If it is in the process of potential, then prevent it from happening. Okay, so first one is regarding addressing the matter, especially for we are talking about a senior chartered accountant, and then determining whether further action is needed. Further action, you have gone to the management, you have gone to the submitting relevant reports forms, you took action to prevent from happening again, but even if further actions needed, shall assess the appropriateness of response to the accountant superior, if any. So when you told them, have they taken any action? Examples of circumstances include, okay, further action. What the further action? Informing the management of parent entity. If you are a subsidiary company, if they are not taken action, go to the holding company. Disclose the matter to the appropriate authority under the law. If you want to inform income tax authorities, SEBI, Enforcement Directorate, any FEMA regulations and all, you can go there, or ultimately resigning from the organization. So first is responsibility of all chartered accountants, responsibility of senior chartered accountants, and then third is seeking advice. Yes, get the advice internally, then get the legal counsel advice, then you can get the institutes, the regular process which I keep telling, follow these regular communication process. Determine whether disclose to appropriate authority, responsible chartered accountants, other than senior chartered accountants, whoever else, what they should do in the course of carrying professional duties. Chartered accountant, if they become aware of information regarding non-compliance, the accountant shall seek to obtain understanding of the matter. Means try to understand first what is happening. This understanding include the nature of non-compliance. Okay, if the chartered accountant identifies the suspect's non-compliance occurred, the accountant shall, subject to consideration mentioned above. Okay, this is where the what he should do: inform immediate superior. Inform immediate superior. If the accountant's immediate superior is involved, then you can next to the higher level. So you have to go to the level hierarchy. In exceptional circumstances, you may disclose to the appropriate authority also. Anyway, so let's quickly go through the points. Responding to non-compliance, alert the management or those charged with governance. Examples are these: follow protocols, discuss with the matter with the immediate superior, make sure the reoccurrence risk is reduced. Further, you can further action informing the management of the company, and you can seek the advice of your legal counsel or from the institute. Okay, let's take a question based on this. Agastya Limited is a listed company engaged in manufacturing of automotive spare parts. The company is preparing financial statements for the year ended March 2003. The directors of Agastya Limited are entitled to incentive based on operating profit margin. Okay, they get a share of profit. You've been appointed as consultant to advise on preparation. There is an issue. The draft financial statement includes an amount of 75 lakhs to loan to director. Okay, they have given a loan. Loan has no specific repayment term, repayable on demand. The directors have included loan under cash and cash equivalent. How can loan be classified under cash equivalent just because payable on demand? Because cash and cash equivalent means anything convertible to cash without change in significant loss, convertible within 90 days in certain instruments. Director's opinion, such percentage should not be a problem. Everything they feel is not a problem. Discuss the accounting principles, ethical implications. So that is a misunderstood the definition. Cash equivalents are short-term, high liquid investments are convertible to known amount. That's what I just told, definition of cash equivalent. However, loan given to that is not in place to enable the limited to manage short-term cash commitments. It has not fixed payment, and likelihood of that default is also not known. So no information available. Thus, it's not a cash equivalent. Further information would be required for what is the fair value of 75 lakhs, at what rate of interest is given, for how long is likely to be there, will the interest rate change, what is the market rate of interest. It could set that the loan will never be repaid, so we don't know that any of those things. Further, since directors are likely to be fall under category of key management personnel, you should also report under Ind AS 24. So treatment of cash equivalent is not satisfying both the characteristics, is relevance also and faithful presentation also. Okay, they have given few more points, you can go through it. Okay, let me come to the conflict of interest. So there is a potential conflict of interest because you are employed by the company and you have an obligation to follow the orders of directors because you are employed by them. On the other hand, reporting is not proper and there is a conflict. So as a consultant, it becomes the responsibility to get the fund statements rectified and guide. So you should get that rectified. Otherwise, you will subject to misconduct. Clause 6 and 7 of part 1 of second schedule of the ICAI. Clause 6 talks about guilty of professional misconduct if he fails to report a middle misstatement. Clause 7 talks about if he does not have exercised due diligence or grossly negligent. Okay. This is regarding responding to non-compliance. Last point, pressure to breach fundamental principle. What are fundamental principles? Integrity, objectivity. If there is a pressure on you, either explicitly, implicitly, they'll tell you, we'll kidnap your children's and say you have to perform this. Or they'll say, if you do this, we'll pay you increase in salary, we'll give you bonus. It can be explicit, it can be implicit. Chart accountant shall not allow pressures. Fundamental principles. Chart accountant might face pressures within the fundamental principle. For example, intimation threat, working professional activity within the organization. It may be explicit or implicit. Examples, okay, they have given. Discuss the circumstances relating to the pressure and consulting with others with those circumstances will help chart accountant. Such matters might include who is putting that putting that influence or pressure. Discuss the matter with the accountant superior. Escalate the matter to the higher level of employment, higher level of management, auditors, those charged with governance. And then consult with the colleague, institute, legal counsel. The same set of things I've been telling even in the past. Okay, let me just take this one question. Yeah, I think that we will conclude. Let's take this one question. The same thing I've given also, right? Pressure might be explicit, implicit. Pressure might be related to conflict of interest. Discuss the individual, discuss with accountant superior, charge with governance. Then you can go with outsiders, that is institute, legal, or internal external auditors. Anyway, let's take this one last question. As on 31st March 2004, Mira Limited had a plan to dispose of 75% of subsidiary. This plan has been approved by the board and was reported in the media as well as stock exchange, where Mitra Limited, I'm reading as Mira was listed. It is expected that Jaya Limited, the non-controlling shareholder in Dosti, holding 25% stake. Okay, Mitra Limited has 75. Okay, other person is Jaya having 25%. Will acquire 75. Oh, those 25 will acquire 75. So 25 plus 75, they become 100%. The sale is expected to complete by October. Dosti Limited is expected to have substantial trading losses in the period up to the sale. Okay, they have a losses. Mr. X, chartered accountant, who is an employee in the finance department of Mitra Limited, who is planning to sell the subsidiary, wishes to show Dosti Limited as held for sale. Yeah, they are planning to sell, so you want to show it as held for sale. in the financial statements and create restructuring provision to include expected cost of disposal and future trading losses. However, COO does not wish to be categorized as held for sale nor providing losses. The CEO is concerned as how this may affect the sales and would surely result bonus target not being met. What and all reason they give? He has argued that as the management is in this duty to secure his high sales price to maximize return for shareholders, he has hinted that X job could be at stake if such provisions were to be made in the financial statement. So he told, we are selling the subsidiary and you are classifying it as held for sale and you are making a provision for loss. If you make that provision for loss, I might not be able to sell this. My bonus target might not be met. If I don't meet, I'm warning you, your employment is under threat. So that's the influence they are putting. Okay, future trading losses, legal cost of sale, redundancy cost, impairment loss. Discuss whether accounting treatment should adopt to address the issue. Discuss the ethical issue. Same set of questions only. So bringing in Ind AS 105, anything asset held for sale which are highly probable should be classified as asset held for sale. In this case, yes, all those points they said as per Ind AS 105, and it is probable it should be valued at lower of carrying amount and fair value less cost to sell. So CEO is incorrect to exclude the form of restructuring provisions. Ongoing cost of business should not be provided. Only directly attributable cost, the recurring expenses, that provision will not do it. That will recognize as and when they incur or as and when they recur. Whereas when you sell the asset, what expenses you are likely to incur, they are called as directly attributable cost. They should be made. So provision required for this one, what, future trading losses? Yes. Cost of sale? Yes. Redundancy cost and impairment losses, I think those things, future trading loss you should not provide. Future trading losses will come when you perform the business activities like sale and purchase. Those loss you don't make a provision now. Legal cost of sale, directly attributable. Redundancy cost for employees, yes. Impairment loss on PP, that is not specifically a loss attributable to the sale. So provision required for 1.4 crores and 4 crores. 1.5 and 4 is 5.5. Ethical consideration, accountants' duty to ensure statements are fair, transparent. You have to take care of the due care, attention, professional competence. These are the your fundamental principle to be considered. And you should be objective, faithful presentation. Threatening to dismiss Mr. X has acted unethically and threatening behavior unacceptable. He is given to ethical dilemma. He has a duty to produce the financial statements in a fair manner. In case Mr. X under influence and applies incorrect accounting treatment, he will be subject to misconduct. Yeah, the same set of things will be there. Whenever you find an ethical dilemma, your answer in examination should be the correct disclosure, appropriate disclosure should be followed. Reporting should be neat, it should be correct. If you don't follow, so that what should be done is the first point. If you don't follow, you will be under a professional misconduct. The clause 1, part 2 of second schedule, 122, you remember 122, clause 1, clause 1, part 2, second schedule 122 will not following ICA guidelines, it will come everywhere. So if you don't follow, you will have professional misconduct. And third one also you can write as a recommended course of action. You inform the management, higher level of authority, inform the outsider, legal counsel, external auditor. If you are not able to resolve, then you can think of resigning from the engagement. So that's a standard conclusion. you can give it for all the questions or at least most of the questions as far as examination is concerned. So this is about and you can use that my charts also, which is good for one day before exam. It's hardly about 3-4 pages. It's in a good neat format. I've given in a chart format. Okay, so this is about professional and ethical duties of chartered accountant, a chapter which has been introduced in the new syllabus.